Good morning, everyone. Welcome to our free YouTube video of the day. Bears take over stock markets, and from Monday to Friday, 8 a.m. every single day, I have a video for you. And today, especially after yesterday action, Bears strike hard. Okay, things didn't fall apart, but we had some big selling pressure yesterday, volume spiking up for the downside. So that's raising some yellow flags here, and I was not expecting that move, but. One of the things that I've been looking for is to raising cash, and that's what I'm doing. I've been day trading. I've been scalping the trades, either up or down. I don't care. I've been getting off the trade, lock the cash flow for the day, get out, and go back into the cash. And also with the swing long shares that I've been doing yesterday, I cash out most of the things that I was long. BHC, Lift were some names that I had some swings from last week for a reversal bounce up, and they worked very well. I locked my profits yesterday, so I'm raising cash here, and I believe that's the action, especially on a big tech week that we are seeing right now, and going into US elections next week. It's very, very tricky, in my opinion, to hold either up or down. Okay, it's worldly. It's like flipping coins. It's a gambling. I don't like to gamble. I'm a trader. I trade for a living. So that's why I don't hold options overnight, because I cannot control. I can control shares, but on options we don't have after hours trading. So if the stocks reverse one way or the other after hours, I can't do anything. So I can lose all the money overnight. So for my own risk management, I prefer something that I control. I hold shares. I can hold some shares overnight, but not options, because I can lose all the premium. So after yesterday action, are bears finally taking over the stock markets? So I'm not going to answer this question right now. I'm going into price. Price is what matters. Okay, so let's start with Dow Jones. Dow Jones last week closed right at the middle of the range. So we have here the Bollinger Bands, we have here the middle of the range. So we have been going on September, we had a big wide range from the top of the range to the bottom of the range, back to the mean reversion, back to the top of the range, back to the middle of the range. So last week we closed exactly at the middle of the range, and I was looking for a possible, and that was what I was looking, a possible resume back up, making a possible lower high or higher low, or higher high, but possible lower high, and from there going back down. It happened yesterday, okay? And I was not expecting that was the case yesterday, especially after the Thursday and Friday weeks when we saw the buying on the stocks and the overall market on Thursday and Friday. I was not expecting that to happen yesterday, but it happened. So opened below the middle of the range and cracked down, going into the lower support. So now what? The oscillator flipped bearish. Now what? In my opinion, yesterday lows are the key, 27,370. If we break below, watch out. We have the 200-day moving average on Dow Jones at 26,200. So that can get very ugly correction ahead. But something to watch. That's a possible scenario. When I'll become bullish, if we reverse and go above yesterday highs, that can give bulls once again the ball for the bull case. But one of the things, and in my opinion that's the biggest concern right now, it's on the weekly charts. I'm start seeing on Dow Jones, Nasdaq, and SP 500 some yellow flags, not red flags yet, but some yellow flags. What are those yellow flags? For example, on Dow Jones, on the weekly chart, we are seeing lower highs. Okay, lower highs. That's one of the yellow flags. The other one, we are start seeing here a possible rollover, also with the relative strength rollover. Relative strength still bullish. We are still holding on the weekly chart the 21-day moving average. But if we break below, look, the 21-day moving average on the weekly chart, 27,310. Yesterday, 27,370. So we are still holding 21-day moving average on the weekly chart. But if we crack below 27,300, watch out. We can have a big waterfall trying to take out 26.5. So we can have a big drop here on Dow Jones. Looking for the Nasdaq, exactly the same thing. Yesterday cracked below the middle of the range, has room to go down. The oscillator flipped bearish. So now what? We are going into the earnings season on the tech names. Microsoft is going to report earnings tonight. Thursday night we have Apple, Amazon, Facebook, Alphabet, lots of names that can trigger a trade one way or the other. I cannot predict how the stocks will react after earnings, okay? So, but for now, bears striking here. When I'll become bullish on Nasdaq, if it needs to first recover 11,600. 11,600 was a big level and needs a move above 11,700. That's yesterday highs, and we need a move above that to trigger a short squeeze up. Okay, so that's something that I'll be looking. But let's look for the weekly chart. Exactly the same thing, and that's a yellow flag here on the weekly chart. Bearish reversal candles, lower highs, bearish reversal candles, 1 to 3 weeks, and stopped exactly the weekly chart on the Nasdaq stopped exactly at the 8-day moving average. If we crack below yesterday lows, watch out because we can go below 11k. Another yellow flag is that the relative strength is fading. If it makes lower low, watch out because we can have a bigger correction. And especially if we take out below 10,677 on the Nasdaq, watch out because we can go below the 10k on Nasdaq and can get very ugly bigger correction. So some yellow signs here. Now, SP 500 is exactly the same. Crack below the middle of the range, has room to go downside 33.22. If it goes below yesterday lows 33.64, watch for 33.22. We have a gap to fill around 3300, so that can be a target here on the SP 500. Looking for the weekly chart, exactly the same thing. Seeing some possible signs, bearish reversal, weekly candles, 1 to 3 weeks. Pullback stopped exactly at the very near the 3400. It's the level, okay? 3400. It's not only a mental level, but it's a big level for the weekly. Look where we stand on the weekly chart, the 8-day moving average, 3400. We closed exactly at 3400. If we go and stay below 3364, we can roll over and we can go all the way into 3306, 3307. That's to fill the gap, and also 21-day moving average on the weekly. We have some yellow flags here with lower highs and calling for a further pullback, and that's some yellow flags that I'm seeing. Also would like to share with you, I use several market breadth indicators. I'm not going, you can review those indicators and go on my blog to see those market breadth briefing that I do every single day. But one of the yellow flags that is raising, it's the McLaren Summation Index, okay? And why is that? Because I was expecting this week for this indicator to flip once again back bullish, and that didn't happen. So we start seeing some yellow flags with the oscillator and the indicator flipping down. What can happen? And that's something that I will be looking very closely. If it happens something like we saw here on Feb this year, and if we crack below the zero line, that's the line that separates bulls from bears. Look that on September, okay, we bounced exactly from the zero line here. So bulls defended the zero line. But we are making lower highs on the indicator, and we flip once again bearish. Okay, so it means that bears are very active on the market, and they have reasons for that. We have COVID, we have the uncertainty of the US elections, we have the second wave that is hitting and striking hard on Europe, and on Europe things are getting very bad. And if that roll over also for US, we can have a bigger impact going into the end of the year, and things can get very ugly. So bears are striking, and if this thing go roll over, and that's what I'll be looking next couple of sessions, if this thing roll over and we don't see a bull cross here, things can get very ugly. That's one of the yellow flags, and something that I will be looking to next couple of sessions. So where we stand right now, yes, bears are active, but we are still not on a bear market, okay? On a bear market, you need, for example, most of the SP 500 stocks below the 50 and 200-day moving average. And most of the SP 500 stocks are still above the 200-day and 50-day moving average. We are seeing some yellow flags, yes. Some cracks, yes. Bears are growing, yes. But that can reverse. And in my opinion, this tech week, it will trigger the next move. And also next week, US elections, it will trigger the move. One way or the other, okay? Until then, very tricky. We have up day, down day, up day, down day. We go from red to green, green to red intraday. So it's very tricky. It's not a smooth sailing. So my risk management right now, get in on the trade, get out, lock the profits, go into the cash, and look for the other trade. Okay, I expect next week, maybe after the elections, we will have a more clear view, and we finally trend. We are not trending right now. Okay, we go from red to green from one day to the other. So it's very difficult to swing long trades here. So manage your risk wisely. It's what I suggest you to do. Okay, so thank you all for watching. It has been great to stay with you 8 a.m. every single day. If you like this video, please give me a like on the video. Also, don't forget to subscribe to the channel, so you, and also turn on notifications so you can be notified on the next video. From Monday to Friday 8 a.m. every single day I have a video for you, trying to help the best I can. So wish you all great trading. Thanks for watching, and one of the most important things of all, be happy trading. Thanks everyone. Bye bye. See you.